Welcome everyone to this workshop on Endeavour Silver Corp. Our presentation today is entitled Driving Organic Growth. And what you're about to learn is that Endeavour is a mid-tier silver and gold producer focused on growth. I will be making some forward-looking statements today, so you are duly cautioned. And some quickie investor highlights. We own and operate 3 high-grade underground silver gold mines in Mexico. We did have a suspension in April and May due to the government-mandated shutdown or suspension of the mines due to the COVID-19 pandemic, but we're now back up and running since June 1st. Our operational focus is on obviously squeezing more cash flow out of our mines, reducing our costs, raising our productivity, improving our safety record. What really sets Endeavour apart from the pack of silver mining companies is that we believe we have the best organic growth profile in the entire sector, with not one but 2 potential new mines to drive future growth. Our competitive advantage is that every ore body that we've developed into mines in the last 16 years were found by our exploration group. So we have a competitive advantage in our brownfields exploration to extend the mine lives of these historic mines in famous old districts in Mexico. We're also very opportunistic when it comes to mergers and acquisitions. We've done 5 deals over the last 16 years, and we've continued to focus on acquiring key assets at low prices to expand our asset base. And last but not least, if you're looking for leverage, you need look no further than Endeavour. As a pure precious metals producer, one of the very few in the silver sector, we have a sector-leading beta or leverage of our share price to the price of silver. So, head office in Vancouver, BC. All the core assets are located in Mexico. We have a portfolio of world-class exploration prospects in northern Chile. Recent highlights include the first half abbreviated production of 1.5 million ounces of silver and 14,000 ounces of gold. That's around 2.6 to 2.9 million ounces of silver equivalents, depending on your ratio, 80 or 100 to 1. We did restart all of the mining operations late May, and our Q2 operating improvements really gained traction with our Guanacevi mine, our largest silver mine, outperforming plan, Bolanitos unfortunately still lagging plan, and El Compass close to plan. Perhaps the most exciting news and the most recent news this week was the publishing of our final 2020 pre-feasibility study for the first of our development projects called Terronera, with some headline numbers of $137 million net after-tax present value, 30% internal rate of return on capital invested, 2.7-year payback period on capital invested. There's an initial mine life there of 10 years with tremendous exploration upside. And what really sets Terronera apart from the pack, it will be one of the lowest cost mines in the entire silver sector, with life of mine site all-in sustaining costs estimated at a very low $2.10 per ounce of silver produced, net of the gold byproduct. We also had a good first half in exploration, discovering new high-grade mineralization at Bolanitos in the Mayadito vein, 24 grams of gold and almost 800 grams of silver over 1.5 meters. And we continued to delineate new high-grade mineralization at Guanacevi, our largest silver mine, on the El Curso area, with over 1 kilo of silver and 3 grams of gold over 10 meters. So our production mix, the current gold-silver ratio is about 55% gold, 45% silver. But as the ratio comes down, obviously, our silver component rises. And we're modeling going forward about a 50-50 split of revenues from gold and silver. Let's have a quick tour of the mines. First up is our first mine, Guanacevi, purchased in 2004, brought to production in 2005. We produce over 3 million ounces of silver per year at Guanacevi. It's the only mine that produces doré bars, which we have refined into pure bullion. That gives us the flexibility to sell or not sell on a weekly basis. And you can see some of the photos, the plant site, the core racks, one of the mine entrances, and the bullion pour. So Guanacevi fell into hard times in 2018-19, and we had to launch a massive turnaround process a year ago at Guanacevi, and we left no stone unturned. The very good news is that operational turnaround is now complete, with tons, grades, and recoveries all well above plan, with new high-grade mines now scaled up to fill the plant. We ran the mines at 1,050 tons per day in the second quarter, and we have a plant capacity of 1,200 tons per day, so there's still a little bit more we can squeeze out of Guanacevi, but look at the grade curve. From the high 200s gram per ton silver equivalents all the way up to the low 400s in just 4 quarters. So big check mark on Guanacevi, turnaround complete. And here's some of the operating metrics. In the first quarter, our all-in costs were $14.61 and our cash costs were $9 per ounce. Moving to our second mine, Bolanitos, in the famous Guanajuato district of Mexico. Here we have a mine that was our most profitable mine for over 10 years, from 2009 to 2018. We pulled more than $200 million of free cash flow out of this mine alone. But it also fell on hard times in 2019 for very much the same reasons as Guanacevi, struggling to make it on the low-grade leftovers of our original discoveries a decade ago. And like Guanacevi, the key to the turnaround at Bolanitos is opening up new high-grade ore bodies and effectively hitting the restart button for the next 5 years at Bolanitos. We didn't start the turnaround at Bolanitos until the third quarter of last year, and it does take a year for these things to take effect. So we continued to lose a little bit less money each quarter in recent quarters, and we hope to break into the black by the end of the third quarter this year. So Bolanitos, you can see the good news is that the tons per day are now rising to fill the plant capacity, also around 1,200 tons per day. We averaged 1,070 tons per day in June, and clearly we can squeeze a little bit more out of this operation going forward. We expect it to break into the black in the next 3 months. Last but not least, El Compass, which is our smallest and our newest mine, it's only a year old, in the famous district of Zacatecas, with a plant located in the center part of the district, and we control effectively the south end of the district. Good news is that our processed tons are higher. Our grades and recoveries, though, were a bit lower. So even though we were close to plan, there's still some tweaking to do on the grades and recoveries here at El Compass. And so a steady state quarterly throughput, chugging along at about 240 tons per day. And you can see it's a really strongly skewed gold mine with a very little bit of silver. Now, those are the 3 operating mines. Let's turn our attention to the most exciting part of our story, which is the development pipeline. These are virgin discoveries by our exploration group in historic districts in Mexico. First up is the Terronera project in Jalisco State. And at Terronera, we have not only our next core asset, but when in production, Terronera represents potentially our largest and lowest cost mine. Bringing Terronera to production will almost double our consolidated production at a significant reduction in our operating costs. It's a district scale opportunity covering over 17,000 hectares. It covers the entire district of San Sebastian with 50 old mines on 50 plus veins. And it's located about 50 kilometers on pavement from Puerto Vallarta. There's a feasibility study now underway to further de-risk the project. And we just this week published the final pre-feasibility numbers to bring a 3 million ounce silver, 33,000 ounce gold mine into production, averaging just under 6 million ounces of silver equivalents per year for a minimum of 10 years. We have already an 80 million ounce silver equivalent resource base, of which 66 million ounces sits in reserves. And this is a high-grade system. It averages about 400 grams per ton silver equivalents, but ranges up well over a kilo per ton. What we published this week was a $137 million net present value with a 30% internal rate of return and a 2.7-year payback. Significant improvements over our previous studies in 2019 and 2018. But look at the costs. The cash costs net of the gold credit are 0, which means that the gold pays for the operation and the silver is effectively free. Even on an all-in sustaining cost basis, you're looking at a very low sector-leading $2.10 per ounce of silver net of the gold credit. So these are the highlight numbers on the base case for the 2020 PFS. If we compare it to current spot prices, obviously the numbers get significantly better. Every financial metric improves sharply based on current prices. And so at, for instance, $18.49 silver and $1,812 gold, we're looking at a jump of NPV to $229 million, jump in the IRR to 46%, and a reduction of the payback period to 1.7 years, with the life of mine cash costs falling to a negative $4 per ounce, and even the all-in costs falling to a negative $2 per ounce using current silver and gold prices. So this is a fantastic opportunity for the company. It'll be a real value driver going forward. It's only going to cost us $100 million of initial capital to build this mine. And once we complete the feasibility study, we're looking forward to breaking ground in the next year. The production and grade profile is front-loaded. We have two high-grade ore bodies that drive the 10-year mine life here. The largest by far, with 90% of the reserves, is the Terronera vein, and every color shown on the map right goes to the plant except blue. And on the lower right graph, the La Luz vein, you can see is almost the entire thing is super high grade, and it will be mined very early in the production cycle in order to spike both the ounces produced and the grades in the first 4 years. Upside opportunities. Well, we're continuing to expand our property footprint. We've applied for new concessions along the south border of the property to cover mineralization that trends off of our property. We can easily expand both the resource base and the reserve base. Reserves by additional drilling to convert inferred resources into proven and probable reserves. Resources by drilling other veins. We have an entire suite of footwall veins parallel to the Terronera vein that with high grades over mineable widths sampled on surface but never been drilled. And on the south third of the property, there's a suite of 12 veins called the Rio Alto system, where we have already some very encouraging results, and yet virtually untouched by drilling. We can continue to optimize the mining methods. With more geotech drilling, we can use a cheaper long hole method to reduce operating costs even further. We can optimize ore transport. We're evaluating a somewhat unique and fully automated underground rail haulage system instead of diesel trucks. We're looking at adopting the rest of the mining equipment from diesel to electric. And there's more tweaking to be done on our metallurgical recoveries. More MET tests are underway at this time to try and boost recoveries. We can evaluate something new and innovative for tailings haulage from the plant down to the tailings storage facility. Instead of diesel trucks, we're looking at conveyors or pipelines. And last but not least, even though we've settled on liquefied natural gas combined with grid power and solar power to drive our power needs, there's still significant tweaking that can be done on the costs there. So next steps, we've launched a feasibility study. We expect to complete it over the next 9 to 12 months at a cost of $1.5 to $1.8 million. We don't need to raise any money. We have that money in the kitty. We want to build out our project development team. We currently have a team leader. Ernesto Lima is our director of project development. We want to complete the EPC process and select a contractor, not only for the feasibility study, but for the follow-on construction. We need to extend some government permits that have now fairly tight timelines, so we're not redoing them, just pushing them out further. We have some long lead items we'd like to order for the mine and the plant. Evaluate additional upside opportunities. Obviously, exploration drilling is the biggest one of those. And then we can go to the board for approval to develop this mine and secure our project financing. Last but not least, we have a second project in the development pipeline, just coming into the pipeline, called Parral. It's in the famous district of Hidalgo to Parral in southern Chihuahua. And this was a 4 million ounce per year mine up until 1990. Actually, 4 separate mines on the property: Veta Colorada, San Patricio, Palmilla, and Cometa. We've already drilled out more than 40 million ounces of total resources at Parral. We think the upside is 50% to 100% higher, and it's a district scale opportunity. Our mission here is to move it along through advanced exploration, initial permitting, initial economic studies, and basically make it the featured project after Terronera is built and running. Last but not least, during the bear market, we took advantage of opportunities to acquire 3 home run projects in northern Chile. And one would say, well, you're a small high-grade underground miner from Mexico. What are you doing looking for big open pit projects in Chile? Well, for very much that reason. We think we can break the small miner mold by making a bona fide bulk tonnage discovery. And because we acquired these projects in the bear market, they didn't cost us much. And yet we have, I think, prolific, albeit high risk, high reward upside in Chile. With 3 projects. Cerro Marquez is a classic porphyry copper gold project. We drilled 6 holes last year. We got very encouraging results. In fact, the footprint of this target is so large, 6 kilometers by 8 kilometers, that we're actually going to look for a copper partner on this one. Paloma, which is up next, is a classic high sulfidation epithermal gold silver system. It's 3 kilometers off a paved highway in northern Chile. It's geologically very similar to the most recent high sulfidation discovery in Chile called SNRS20, which has 4 million ounces already drilled out. And we are already permitted for drilling. So this will be a 2020 drill program in the second half of this year. Aida, which is our bulk tonnage epithermal silver target, tucked up into the corner of Bolivia, Argentina, but located on the Chilean side of the border, is not yet permitted for drilling. That'll be a project for next year. So all of this adds up to sector-leading growth. We have tremendous leverage, cash flow leverage, to our growing silver production through our 3 operating mines at Guanacevi, Bolanitos, and El Campos. We have the sector-best organic growth profile with not 1 but 2 development projects at Terronera and Parral, and we have this home run potential in Chile. 143 million shares outstanding at the end of March. Current share price is around $270 US for about a $400 million US market capitalization. We had 15 million in the bank at the end of March. There's significantly higher cash at the end of June. And the VanEck GDXJ Index Fund owns about 6% of the company. The largest silver mining company in the world, Fresnillo PLC, has a 2% toehold in Endeavour. 9 analysts cover the stock. And I mentioned already our leading beta to silver. You can see with Endeavour's 5-year beta at 1.6 times the silver price is a sector-leading leverage to silver. So 2020 catalysts, well, completing the sustainable turnarounds of our 3 operating mines from the difficulties they had last year, check. Expanding our silver resources through continued brownfields acquisitions and exploration, check. Optimizing the Terronera PFS as of this week's news release, check. Preparing an initial Parral economic study and initial permitting, still to be checked, but a work in progress. And last but not least, we continue to be opportunistic, looking to grow through mergers and acquisitions. So why invest in Endeavour? What you get with Endeavour Silver Corp is a mid-tier silver producer with 3 high-grade underground silver gold mines in Mexico, run by an experienced management team who have our own proven track record for success. We have a compelling organic growth profile, a strong balance sheet with no long-term debt, and we're a pure silver gold player. Thank you very much.